Hello, and welcome to the Daily DCA, where I will dollar cost average $1,000 every single day. I'll mostly be dollar cost averaging into Ethereum, my favorite layer 1, but I may do other ones as well, like Cardano, maybe a little bit of Solana, and possibly some Bitcoin as well. I'll follow this up with some TA, technical analysis on the market and its possible sentiments. If you like what you see, do subscribe. This is my first video, so I'm definitely nervous. But if you like what you see, do subscribe and like. It definitely helps with motivation. I'm not particularly absolutely motivated to keep posting these videos, so I'd love the help. The support from you guys would be wonderful. If we do look at the charts today, we see that we're 2 days consecutive of a pump here. This is pretty interesting. I remember waking up really early this morning and seeing it at 39, below 3,900. Now I got very excited, but I didn't make a move, and regrettably so, because it would have been quite an opportunity. And here we are, 2 days in a row up. We don't know if this is going to. It's broken out of its local downtrend, right? But we don't know what else it's going to do. Like, are we going to go way further up? We're not sure. And we'll have to wait and see. Like, this is the local downtrend. And it held pretty close. And we've just broken out. So what's going to happen? We're not sure. But we've had similar instances where things like this have happened before. Like, we did technically break out here. And we still have the rest of the day today to see if we maintain this. But 2 positive candles in a row is pretty good news. We haven't had that in a long while. Last time we had this was over here. Over here. So let us see what happens. I was also looking at the MACD, and the MACD isn't giving me too many clear indicators. I'm not going to rely on that right now. But this is bullish sentiment. And let's see what can happen. I know we had some news today about the interest rates. What normally happens when an interest rate or an inflation rate message is sent out by the Fed is we get a pump and nothing much more than like we get a pump, but it's quite temporary and we do come back around. But what's more interesting than any of this is this death cross on the way. Now this is the 200-day moving average and this is the 50-day moving average, and that when they cross, when the green one, which is the 50-day, crosses over the 200. We get a death cross. And what a death cross indicates is definitely bearish sentiment. Now, we've had this happen before, and what's interesting in the past is we've pumped into it. Right? As you can see here, we went from down here, we had a candle that went down, and then we pumped into the death cross, and then we went over, and then went under further, about 20% down. And I believe this happens over here as well. We didn't pump into here, but we certainly went down. So this is something that we probably want to take note of, right? When these death crosses happen, it's probably something that is probably a good indicator that we're going to come right back around. So I can see us going something like that way, and then coming back down. But we'll have to wait and see to see what happens. Obviously, we'll wait a couple days. I mean, this seems like in about 7 days we'll have a good idea of how this all turns out. Aside from that, there isn't much else to say except I will be dollar cost averaging $1,000 a day into my favorite cryptocurrency, which is Ethereum. This is my Shrimply dashboard, and you can see that it's $1,000. Today's the 12th. I've already purchased my allocation. I purchased it this morning about 7 a.m., 7:42 a.m. And I'll be doing the same tomorrow, and I'll be dropping another video with updates on this. And if we're making this as this happens, looks like these two are going to touch in a couple days from now. So we'll keep an eye on it. I don't know if there's a point in looking at the ETH markets, and the reason I say there isn't much of a point in looking at the ETH markets is it really is. I mean, we're not going to see. I don't think we're going to see. I don't think we're going to see. We're not going to see Ethereum lead the way. We're going to see Bitcoin lead the way. So what happens here is really what's going to determine what's going to happen for the rest of this. Now, I I do want to point this out, that we should be looking at the death cross. Sorry. There we go. What? As my first time writing this, doing this YouTube video, it definitely does make me a little bit nervous, because I feel like I'm screwing everything up. But I suppose this is normal, and please forgive me. But yes, this death cross is imminent. It's just a few days away, and if we go into the weekly, there we go. So we could probably say next week is when we're going to see these two things touch. Now, these are not leading indicators, of course. These are lagging indicators. So we're going to see the death cross next week, and it's a lagging indicator of what happens. I also want to something that you may think is, can we avoid the death cross? Absolutely not. We can't. And the reason is, we'd have to pump tens of thousands of dollars to move the 50-day moving average, which is the green line, to get that to shift up. Yeah, that's pretty much impossible. I don't see, there's no sentiment at all. And the size of candle you would need is probably the length of this entire candle here. I mean, both of these candles put together, that's a 40% dip, I think, or a 50% dip. Is what you need, a 50% uptick, which would really take us right back up to the 60s to get there. What is interesting, though, is when we do see something like this happen with the death cross, we see that it pumps up, right? It'll pump up into the death cross, and it'll come down about 20%. And at 20% down from around this point is about 35K. So that would be quite interesting to see that happen, for it to come down to about 35. But let us see. 35 would be right around here. What's interesting, though, and there seems to be some support, so this might actually work out at about 35. This was our summer dip or lull that we had. So we could come right down to about 35 if this all plays out as we expect. And then really what we want to see happen is we want to see this dip come and really would look like this. And then come to about 35, and then really boost up from there. This is what we want to see. Go right up to 100K probably. I mean, of course, we'd have our ups and downs as we go up, but nothing as drastic as what we see here. Of course, I am guessing, and I am not a fortune teller. If I was, I certainly would not be dollar cost averaging into this market. And the reason I do dollar cost average, and I'll probably talk about this again tomorrow, is because I don't know what's going to happen. And the dollar cost averaging really helps level out the risk. It makes this whole thing a lot safer. But yes, aside from that, it's pretty interesting. I do prefer dollar cost averaging because you can level out that risk over a long period of time, especially in something like crypto where it's so volatile. Something like dollar cost averaging makes it feel a lot safer. So this is the daily DCA, and I'll be DCAing $1,000 every day. Come back tomorrow and I'll show you some more of what's happening, and we can get excited about this dollar cost average. It'll be 2,000 tomorrow. By the end of this week, or next week, this day, it'll be 7,000, and by the end of this month, it'll be something like 27, I think, or I don't know what it'll be, like 15 or something, and we'll keep going. I don't have any plans on stopping dollar cost averaging, so we can really go up as long as we can. But yeah, see you shortly.